Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. The title of this video is Investing in Leaps. Just again, that's investing, not to be confused with trading. A lot of you requested this, so I thought I would oblige. To be clear, I haven't had as much experience with Leaps as I have with decades of trading options. Yes, I used to only use options for trading, pretty close to gambling. I only started using Leaps with Tesla, and I haven't used them with any other stocks. I suppose I should first off explain what a LEAP is. It stands for Long-Term Equity Anticipation Security, which is a fancy way of saying a call option that lasts over a year. It's a contract that gives you the right, but not the obligation, to be able to buy 100 Tesla shares at an agreed upon price before a certain date, and you pay for this contract. Due to the fact that LEAPs have a much further expiry date than a typical call option, they cost significantly more. For example, right now, a May 7th option on the money costs $46 a share. A June 17th 22 option costs $218 on the money. But you have over an extra year for the stock to increase that much higher. From there, you're stuck with the dilemma of trying to decide what strike price you'll buy at, weighing it over what expiry date. The higher the strike price, then the lower the cost of the LEAP. Yet the longer the expiry date, the higher the cost of the LEAP. This is the trade-off you need to decide. My reason for LEAPs is simply that I want to own as many Tesla shares as possible. That's all. That's the only reason I am buying LEAPs. Why does this enable me to own more Tesla shares? This is why I am saying I invest in LEAPs, because I am only using them as a way to buy more shares, not a way to trade them. I am hedging today's price to exercise them in the future, when I have more money. If I had enough money, I would likely simply buy the shares now. The LEAPs simply allow me to leverage about 3 times as many shares. Yes, you can do a similar strategy by buying on margin. Remember, buying on margin, you're also paying interest, but you're also risking the possibility of losing shares if Tesla had a big dip, depending on how much you've purchased on margin. But to give you a comparison, we're looking at leveraging about 3 or 4 times with LEAPs. i.e. you would need to have about 70% on margin to do this strategy, which in my opinion is kind of risky, but if that's your strategy that works for you, then fair enough. I'm not aware of your situation. For years, being a Tesla investor, you always have this concern, or excitement perhaps, depending on your position, that the stock price will jump eventually, and it has done exactly that in the past. And you think it might do it again. Each time it jumps, it means that you're simply going to have fewer shares if you are still building your position. We all have our own opinions on what Tesla could be worth soon, but in my opinion, what Tesla can achieve in over a year or two could be absolutely amazing. We don't know what sort of breakthroughs could occur. We assume a good chance of level 5 autonomy, which could potentially double the stock price at any moment. I've done projections on Tesla's stock price for when they're able to achieve 200 gigawatt hours of batteries too, which could double the stock price also. Essentially, there are a lot of potential events that could possibly double the stock price. I've created a table for LEAPs at various strike prices, along with their price per share. I thought we could go through that to help you get an idea of what type of LEAP would be best for you. At the time of this video, the stock price is $740. I've started the LEAPs at a strike price of $700, which is what we call $40 in the money. For an expiry date in June 2022, the cost is $230 a share. This would imply that Tesla's stock price needs to rise to $930 until you make any profit on this LEAP. So you have until June 2022 for Tesla to reach over $930 to make a profit, as $700 plus $230 equals $930. Remember, Tesla has been at $900 earlier this year, and since then, Tesla have only been progressing further, along with record deliveries in the previous quarter. I've picked a range of strike prices from $700 to $1,500. We can see that the $1,500 LEAP is $74, which is about 1/3 the price of the $700 one. But that's a long way for Tesla to go until you're even in the money. Below that is a table that shows how much the LEAP is in the money at various points the stock price could be, and gives the dollar amount that you would either be in or out of the money. I say in or out of the money instead of profit or loss, as there is always a premium value on top of the actual face value of the option. This would only be called a profit or loss at the time of expiry. Before that time, the expiry date does hold some value, but from now on I will just say profit or loss. Below that is a percentage of how much each LEAP has lost or made. Bear in mind, any percentage that has greater than 100% is wrong, as you cannot lose more than 100% of what you invest. So let's just analyse the table. You could start by thinking what you might expect the stock price to have reached by June 2022, perhaps $1,000. If you look at the $1,000 row, then you will see that the returns are not great. The stock price itself is already up 35% anyway. In other words, if you had bought shares, then you'd be up 35%, which is actually less return than any of the leaps we are seeing. But this is June 2022, over a year away. We have Berlin and Texas cranking by this stage. Perhaps $1,200 or $1,500 is more a possibility. At $1,200, your best return is actually the in-the-money leap, with a strike price of $700. But when you get to $1,500, we see the out-of-the-money options being a better return. And then if we got a stock price of $2,500, the $1,500 options have a return about twice as good as the $700 options. Personally, I like buying fairly close to the money with my leaps. For example, the $800 strike price is $195, but the $1,000 strike price is $143. It's only $50 more, but has a strike price of $200 less. And the stock price would have to go up to $2,000 for the $1,000 strike price to be a better return. With leaps, the price is really in the length of the term, more so than the actual strike price, due to so much potential value being added over that time to the company. It's up to you to decide what strike price you think sits right with you, run your analysis and see what you come up with. Your strategy might be different from mine. It might be to cash in your leaps to buy more. I've also created the same table for January 2023 leap. By January 2023, we would have seen all the year's deliveries for 2022, which could have quite possibly been over 2 million, with Texas and Berlin fully ramped up, Cybertruck in full swing, and possibly even a Model 2 launch. Plenty of events that could bolster the stock price. If we're up around $2,000 a share price by then around the $800 to $900 strike price has the best return. But in all honesty, they aren't really too dissimilar, which is why I like buying close to the money for the leaps. It seems much better value with a lot less risk. The downside being you can't afford quite as many, but we aren't talking about a big difference. For example, if you had $100,000 to buy leaps, you could buy 4 contracts with $800 strike price, or 5 contracts with $1,000 strike price. It's only one extra contract, or 25% more shares, coincidentally enough with a strike price that is 25% higher, and therefore needs to go 25% higher until you're in the money even. When I'm playing call options that are only a month out, it's a bigger difference, as there is less value associated with the length of the term. Therefore, you could buy twice as many call options for the same price with just a slightly higher strike price. Bear in mind, if you do not exercise your leaps and sell them, you are likely subjected to tax. That tax could have gone into more Tesla shares. When you come to buy your leaps and choosing an expiry date, think about what is happening with the Tesla company too. For example, if you can try and buy a month after when deliveries or earnings are released, then that would likely be something that gives the stock price an extra boost. Of course, when I bought my leaps, I did it on the dip. Mine are all pretty much already in the money now. We never know if Tesla will dip again, but I'm actually fairly happy with the number of leaps I secured on that dip. As it is, I may have trouble finding the money to exercise them all, although some are not due until 2023. As usual, I have left you a link in the description below for you to download and try this model yourself. But now I do still have to save enough money to exercise all my leaps, which is the next task. But it would be great if you could at least help me out and hit that subscribe button for me. Thanks for listening.